Okay, now we're going to discuss combining market structure, zones, volume, and candlesticks. We've been learning all of these pieces in an isolated manner, and we are gearing up to review all of the Profit X setups, which will come later in the course. But what I want to talk to you about right now is how we will combine market structure, zones, or levels, volume, and candlesticks. This is the foundation of all of the Profit X setups. If you understand how to combine these, then you will have an advantage in the market. So we'll start off by looking at market structure. So just a reminder. So market structure is designed to organize how we see the market, our perspective of the market. That market structure, we can see which phase the market is in. If it's in the accumulation, markup, distribution, or the decline phase. So the zone is our interest, the area of interest for us to enter, because we want to enter at a place that will give us the least amount of risk exposure. So that's what we use the zones for. The volume is a sign of the aggressive buyers or aggressive sellers. When there's low volume, that means the aggressive buyers and aggressive sellers are not there. So we don't want to be there, right? And the candles are communicating to us in real time what's happening when it comes to supply and demand, what's happening when it comes to aggressive buying and aggressive selling. So this is our last sign for entry. So let's talk about how all of them line up, how we will combine them. So first off, market structure gives us direction. There are a few ways we can look at the market. Some people look at the candle and go up. Some people look at market structure and go down, top-down analysis. I go top-down, starting with market structure. That's how I see the market. And then I zoom into the candle in order to get my last confirmation for entry. So if you look at it the opposite way, that's okay. If you look at it from the candle up, that's okay. This is just the way that I see it. So the direction here, we can see it by market structure. So we are in the accumulation phase. I'm going to show NAS 100. So the examples that I'll use when it comes to instruments throughout this course are going to be the top instruments that FTMO reports that the most prop firm traders use, right? So that's gold, US 30, NAS 100, GBP JPY, and GBP USD. So all of my examples, I'll be using those 5 pairs. And the millionaire traders that I personally know, they trade using those pairs. Not all, like, so some of them use gold and GBP JPY. Some of them trade with just US 30, right? Some of them trade with just NAS 100. So those are solid pairs that we will use and we will look at. And if you trade any of those are solid pairs. They fit within our system. So accumulation, there's range. We learned about the ranging market, right? So accumulation is showing there's some ranging, but when price breaks out of the range and comes back and retests the range, then it's highly likely that we're going into an uptrend. Okay, so the market structure, when we zoom out, look at it from the higher time frame, the market structure is giving us the picture, the direction. Okay, so let's look at NAS 100. So NAS 100, if we see NAS 100 here, this used to confuse me. When I used to go to the monthly and the weekly, I'd be looking at the monthly time frame, I would be looking at the weekly time frame, and I would see that the trend is down on the weekly. That trend is too high for us to be trading from. We're day traders, so we need to look at what the market is doing on a smaller time frame than the weekly in order for us to get into trades from move to move, okay? So what we're gonna do is we'll be aware of what's happening in the overall market. Overall, price is going down. But if we look at the daily time frame will inform us of what phase we're in. So here, if you look at what's happening with NAS it's rising, but this is accumulation. It's rising, but it's more of a range. There are different names for these different patterns people have called them, but it's all the same principle. If you see the price here where these wicks are, okay, it's ranging. Price is ranging right here. So it's basically ranging. and then price comes out of the range. It breaks out of the range. Once price is breaking out of the range here. Okay, so let me take a step back. So if we look at the phases, right? Look at the phases in the market. So here, this is a big decline. Okay, big decline. Price ranges, it has a small markup, hits a distribution and hits another decline. Now price is ranging in between here. Okay, so this is accumulation. Once we are in the accumulation phase, this is where the aggressive buyers are accumulating positions to go up higher. Okay, so it's in this range. What happens here is, so you see price was going down aggressively, but some aggressive buyers came in, it took the market up, price came down, and it could not surpass this level. This means that there are buyers, there's demand at this level because the aggressive sellers cannot push below that level. So this in the accumulation, as we discussed in the 4 market phases video, in the accumulation phase, the buyers, the aggressive buyers, they're doing some tests to see how strong the sell pressure is, how strong the supply is at this zone. So, and also they are buying and accumulating the offers. Okay, so every time it comes down here, they're accumulating more offers because the more contracts they have with them, as the price rises, the more they have to sell when it comes down. So they're accumulating contracts, accumulating orders. And then once they break out of the range, which is accumulation, when price comes back here, as we know, this is a break and retest structurally. We know to shoot right here, okay? And then as the price rises and hits the different zones. So I'm gonna go to the 4 hour now. I'm gonna go to the 4 hour. All right, so once price breaks this zone here, breaks out of this what was accumulation. Now we could have been trading here too, but I'm just telling you the principle of the market structure. So principally here is a 4 hour zone. So once price breaks this 4 hour zone here, breaks this one, comes and retests, we can buy. Price breaks another 4 hour zone. If we look across, that's a 4 hour zone there. Okay. So when price breaks above that here, this is another opportunity for a buy. Big, strong candles. Okay. Big, strong candles here. So once it starts to rally, we can take these buy positions. Okay. We can buy here on the break. Once it breaks above here, we can buy again here. Okay. So if we go back to what we were talking about here, the accumulation phase, market structure breaks out of it, and that gives us the direction. Now we know we are in, it's a high possibility that we're in the market phase. Now, next, the zones give us an area for buying and selling, right? So we're thinking about our confirmation. So first, our first confirmation market structure is buying. It's in the markup phase. The second, we're going to look for a zone to buy from, okay? So let's pretend that there's a demand zone, okay? Once we know that this is a demand zone and price is going up, now the combination of those two, the direction and the zone, gives us a basis for our setup, our idea, okay? So we go back to NAS 100. I'm going to use this one. So if we go down to the 1 hour time frame, tell me if you remember, what do you see? Rally, base, rally, okay? So we have rally, base, rally. Okay, so rally, base, rally. Now we are in the, it appears we've entered into the markup phase. Big aggressive buyers, still pushing the market up. We zoom down to the lower time frame, still the same. Aggressive buyers. Remember, price can only go up this way if there are aggressive buyers that are looking to buy all the offers at higher price points. So this aggressive buyer here broke through this zone. And as we break through zones, if you remember, there's supply at these zones. And once we break the zones, and those people that had supply there, their stop losses will either be hit, right? Or their supply was consumed and they got out, right? So once price breaks the zone, then people that are in here and holding, if they have a stop loss somewhere there and they see that it's strong buys, they're going to get out of the position, taking supply out of the market. Remember, if there's a lack of interest in the market, then the prices can raise higher, right? Because there's not strong supply. So there isn't strong enough supply here. This is an easy path upwards. And we're going to go with the trend. We're not going to be looking at the other side. For some reason, people were looking at the zones on the other side of the trend, trying to time it. No, let's wait until it comes back and retest and then shoot it confidently, okay? So we see a demand zone, all right? So market structure's up. Demand zone, rally, strong look, rally, base, rally. Here, price comes back to the demand zone, okay? And this is where we want to buy from, in this demand zone. We want to go a little bit further now, back to the confirmation. So what's next? The zones. What's next? The volume. So we want to look at the strength of the moves. Again, if the moves are strong, that means that there are big aggressive buyers or sellers. And the only way that the market will stop and go the opposite direction is if there is a strong force in the opposite direction. So if you see strong buys and they're doing a rally campaign up, most likely the institutions are all jumping on the same side and they're all going to buy up the offers, rally up the market so that they can sell from a higher price. So we should be looking at the candles. Okay, so we talk about volume. Look at these candles. This is US 30 here. Large candles here, big bullish candle, large volume here, boom, candle, 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 okay? This is weak volume, low volume, very small candles, huge move to the upside, big candles, rally, base, rally. Then price came back over here. Even though there was some selling, some strong selling, the momentum is up. So even though some people may have gotten into a sell here, trying to time the sell, if they tried to hold that, they got wiped out because the momentum is up right now. The buyers are aggressive. The strong buyers are aggressive. So we don't have to try to time the market. We just need to go with the trend. So here, low volume, massive volume here. Look at this candle, huge, right? So if we go back to NAS 100, if you look at the candles here with this rally, look at the candles, huge, massive candles, massive 4-hour candle, another massive candle that created the 1-hour demand. So if you see this type of volume, you should not be trying to time a sell. Market structure is going into a buy. The zone is a buy. The volume is a buy. We should be buying. So rally, rally, rally the market up, okay? So that volume is what we want to be paying close attention to. So now you see this bear candle, we wouldn't be buying here, right? Because we're still in that range. So we wouldn't be buying here. But once we see these strong, massive buys that break this area that was absorbing the buys before, every time the buys came to this area, there was supply there that absorbed that buying power, and then aggressive sellers came in. Price went up to that area, was absorbed, sold again. So now price sold hard, but then nothing happened. And then some big aggressive buyers came in and they were able to take out all of the offers that were there. And once that breaks, boom, now we go down to see the zone. We're in the 4-hour zone and a 1-hour demand zone. There's high volume. So this is very promising. Now the last piece is the candles. So number one, market structure, higher high, higher low, higher high. Number two is the zone. Number three, we're looking at the volume, the candles. And then number four, we can enter from candlesticks. When the candle's printed here, we can enter. So we go back to NAS 100, and I'm going to talk to you about the candles, the time frame that I use. But if we go down to look at the 30-minute time frame or 15-minute time frame, what we're going to see are a lot of buy candles forming here. Okay, bullish pin bar, bullish engulfing, morning star. See, there's a bearish engulfing, but then look, another bullish candle, Even if you saw this bullish candle, you didn't enter down here, you saw this bullish candle, that's it. When it comes back down here to retest, we should be in this. So that's how we'll combine market structure, zones, volume, and candlesticks. So leave your questions in the comments in the comment section. See you in the next video.